Hi, welcome to this video today, which is all about the best forex trading strategies and techniques. And what we're going to be doing is we're going to be looking at one of the most successful hedge funds of all time, and probably most famous hedge fund of all time, which is the Quantum Fund, which was set up by George Soros. And he also had two other traders with him at the fund who went on to become trading legends as well, Jimmy Rogers and Stanley Druckenmiller. I'm just going to go through what I feel are the key lessons we can learn from these great traders and the fund itself. Now, in terms of George Soros, in terms of his investment philosophy, he actually wrote a theory about market movement. I recommend any serious trader go and read it. It's the theory of reflexivity, and it's up there with Dow theory in terms of understanding market movement. And in brief, it just basically postulates the markets are imperfect, and one of the key components of technical analysis is that all the known fundamentals are discounted in the price. Soros put forward the idea that they are not at all, and that traders will basically have biases. So it doesn't mean that if a bullish news story comes out that it's immediately discounted, because traders will go forward acting on their biases just as they do in a bear market. What he actually also postulates is that the more bearish or bullish something becomes, obviously the less it's going to take to turn it around. So basically what you want to do is bet on the unexpected. So very much a contrary trading strategy. I've always been in favour of when a market, no one thinks it can go lower or higher, to look the other way, because it is probably going to reverse. Other things I like about George Soros, simplicity. He actually said, if you have systems that are too complex, they're more prone to error. There is no merit whatsoever in complicated trading systems. They do not work. Simple trading systems will always work. And Soros also made another key point about investing when he said it's boring. It is boring. You don't want to be trading too much. And Jim Rogers actually makes this key point as well. He's saying traders are always wanting to be doing something. Well, the best thing to do most of the time is nothing. The best trade most of the time is to basically stay out of the market, to stay flat. You only want to bet on high odds trades. For the rest of the time, you wait until those high odds trades come around. Like Jim Rogers said, he waits for trades that are just so good it's like going and picking up money in the corner. Now, trading may not be that easy, of course, but you do actually have to focus on high odds trades. Now, one of the things that the Quantum Fund did is they were not highly technical in terms of using computerized trading systems. They were very much fundamental traders, and they were very much sentiment traders. There's always a big argument in the forex markets as should you use pure technical systems or should you look at the fundamentals. My own view is look at the fundamentals, the big ones that drive prices. Use your charts for timing, and always have your eye on sentiment. Look at sentiment indicators. Charts don't come out of nowhere. They come out of the fundamentals, and also sentiment. Sentiment will give you advance warning of what is going to happen on the charts. I've always said my favourite sentiment tool, CFD CNET Traders. That will alert you to turning points very often before the charts will indicate them. And one of the big things about forex trading, or if you're trading any speculative odds-based market, is to make superior returns, you have to vary bet size. I've said this in other videos. If you want to use a consistent bet size all the time, you're not going to make significant amounts of money in the markets. And I've contrasted it before to poker and blackjack. If you look at poker and blackjack, they are odds-based games, and the successful poker or blackjack player will vary bet size. Okay. Also, a key thing you can learn from the games of poker and blackjack is you spend a lot of the time folding or putting your hand down and not making any money, or passing by. And I think that comes back to the patience thing again. Traders are just too impatient. They just want to get in the markets all the time, take low odds trades. It's not the way to trade. Now, going back to variation of bet size, it's a very famous story where Stanley Druckenmiller, who was in charge of betting against the British pound, you remember the trade that broke the Bank of England, he was betting $1 billion. And Soros actually just came in and said, "You call that a bet?" So he meant gear it up. And Druckenmiller made the point that, if you want to make really big money, you actually have to really bet big when the odds are in your favour. Vary your bet size. So if you see a really great odds trade, put the bet size up. And the quantum fund was very much, if they didn't have enough money, they would, for a high odds trade, they would just come out of other trades to put money in up to the level that they felt was acceptable in terms of risk reward. But the key point to remember is vary your bet size. So you can be at 2% if you want when you're winning, go down to 1% when you're losing. If you're on a good run and you see a really good high odds trade, I would be up there at 5%, sometimes even more. And in terms of hedge funds today, they've got kind of a bad reputation because overall they have a very, very poor performance. The quantum fund, when it came out, just had a fantastic track record of gains. And all the traders that were at the quantum fund were pretty humble guys. I mean, Soros is not an arrogant guy, and I really like Jim Rogers. You often see him interviewed on the news when he's asked where things might go, and he'll just say, "Well, you should be watching CNBC or Bloomberg." It's tongue in cheek, and he also always makes a comment about he's not that great at market timing in terms of picking tops or bottoms. And I think that is another thing that traders should learn. You're not there to pick market tops and bottoms exactly or predict when the turn is going to come. Wait for confirmation. You're not going to get the exact high of a market, the exact low. You don't trade when the odds are at their best. You always have to have confirmation of a move. And I think in terms of being humble and respecting the market, you actually have to do that. And you have to admit when you're wrong. It's like Soros said, the reason he made so much money is he knew when he was wrong. Markets are imperfect, okay? Human nature is unpredictable. And he said once you accept this, then there is nothing wrong in just taking losses and keeping them small. When everyone focuses on Soros's big trade in the British pound, but he had some howlers like in the Asian markets. We got absolutely hit hard. But he was wrong. The loss he took was realistic, and obviously then he focused on sticking to the trading plan and basically going for the high odds trades. And I think if traders want to come in the markets and not feel pain or stupid, and they want security in uncertainty. Unfortunately, in forex markets, you just don't get that. You have to deal with uncertainty. You have to deal with the fact the market can do anything at any time. I often see people saying, the market can't do that. Yes, it can. It can do anything it wants. What you have to rely on is self-control in uncertainty. That means having confidence in your trading plan, but also having courage to go with those big trades. I've never seen it as a big thing in terms of taking losses. As long as you get your stop in straight away, that's fine. Taking profits, having the courage to hold a profit and milk it for all it's worth is, in my view, far harder, because it's always tempting to take that profit a little bit early. But you have to get around that. You have to stick with your trading plan and only come out the market when you've got a good gain. So I think, in terms of the quantum fund, I'd recommend anyone go and read up on it. Also read more on Jim Rogers, Stanley Druckenmiller, and of course George Soros. True legendary investors, and some of their techniques. They make clear what they did to make money, and I think the techniques we've just gone through are pretty simple. Okay, we don't know the actual quantum strategy itself, but if you keep in mind the techniques that we've just discussed, then I think you can put them in your own strategy and hopefully make some big gains trading the forex markets. Thank you for watching me as usual. Take care. Have a good day.